The US central bank decided to keep the key interest rate unchanged. Notably, the ongoing inflation rise could be a good reason for the interest rate hike. In fact, this was the most expected outcome. Investors were looking forward to Jerome Powell's comments, which did not disappoint them. Thus, the Fed chair confirmed the regulator's intention to continue the monetary policy tightening. However, he emphasized that the key rate had almost reached its peak. What's more, Jerome Powell expressed contentment about the recent report prepared by the U.S. Labor Department. According to it, the U.S. unemployment rate increased. Since the Fed is concerned about the possible overheating of the labor market, a slight deterioration in the indicators may calm it down as it diminishes such risks. Nevertheless, this is just the first sign of economic improvement. It's too early to talk about a change in monetary policy. In other words, the benchmark rate will continue rising, though slower and less significant. Against this backdrop, the US dollar showed a moderate increase. Thus, the euro resumed falling against the US dollar and hit a new local low of the downward cycle. As a result, the quote slid below 1.0650, having an impulse of more than 100 pips. Such a sharp price change could be explained by a high speculative activity caused by the FOMC meeting results. If the price settles below 1.0600, the volume of short positions will surge. In the event of this, the euro may slide to the next control level of 1.0500. Notably, the quote has already dropped considerably. That's why it may enter the oversold area, which may spur an upward correction. Meanwhile, traders also paid close attention to the news from the United Kingdom. The UK inflation figures published yesterday had a zero effect on the market. We just saw a local jump in volatility that led to nothing. Nevertheless, an unexpected decline in a consumer price growth to 6.7 from 6.8% intrigued traders before today's meeting of the Bank of England. Curiously, analysts had predicted an increase to 7.1%. So, the Bank of England decided not to raise the key interest rate to 5.5% as expected and took a pause. Thus, it kept the key rate at the level of 5.25%. And this is the first pause in the tightening cycle in the last 2 years. And at this slide, the pound sterling tumbled to the lowest level since March. As a result, the currency broke the support level of 1.2350, thus intensifying the downward movement. And that's all for now. We keep monitoring the financial market situation. Subscribe to our channel and see you in several hours. We will take a close look at the US trading session.